Hello and welcome. My name is Greg Crawford. I'm the editor of TABB Forum. I'm joined today by Al Berkeley, chairman of Pipeline Trading Systems. Al, good to see you.
Delighted to be here. Thank you for having me.
Absolutely. So Al, you guys at Pipeline, you and the team have been working on something called predictive analytics in your models, and I wondered if you could share with us a little bit about perhaps maybe starting out, tell us the genesis of that, and then we can get into some of the specifics.
Sure. Well, the genesis of it in one regard is that it's the next major step in trading technology.
Okay.
It's the inevitable thing that has to happen next. It has been sort of asymmetrically available. A lot of the more sophisticated hedge funds have invested in it for years.
Okay.
But it has not been available to the buy side, and we're making it available to the buy side.
So what is predictive analytics then?
Well, predictive analytics is a step in which the traditional methods of trading, the first S-curve, if you will, the first technology curve, was call your broker. The next was direct market access, in which you keyed in what you wanted on a terminal that went directly to the markets. The third technology curve was algorithms. And algorithms had two phases. One was just storing those keystrokes that you wanted to have more conveniently automated and did what you told it to. And the second was what's called stored logic, but it's stored nested conditional logic. In other words, if this, then that. Okay. The conditional phrase is stored in those algorithms. And you can get extremely complex. But what's missing there is the ability for the computer to anticipate things based on a base of experience. And so what predictive analytics does is create what we call an OODA loop. Observe, orient, decide, and act. Okay. This is a U.S. Air Force developed term. But the computer observes the market conditions as they exist today. Let me give you a very simple three-factor model. Okay. It might say, well, the market is up, the industry this company's in is up, and the stock itself is up. And it goes and finds where that situation has existed before in a reference database and says, what are the probabilities that the next trade in this stock will be up, will be sideways, or will be down? And then it incorporates that percentage of experience back in the decision of what to do, picks the appropriate instructions and algorithms to do it, and acts, it executes. So you've observed, you've oriented, you've decided, and you've acted. All of that is being done at computer speeds, taking into account enormous amounts of historical data and getting the probabilities extremely up to date and real. And
there's a component you mentioned earlier that if it runs into a situation that it's not familiar with, it kicks it back to the trader or to a human, right? Can you explain how that?
Yes, the systems are set up to recognize certain parameters, and if you have extreme volatility, for example, where you're having 100-point drops or 200-point drops or 300-point drops in the major indices, a computer can say, okay, I want a human to look at this because I don't have a good reference base on these situations, or it can say we want the trading to slow down or accelerate based on the probabilities of making the right decision. So, for example, on May 6th, we were very pleased that our systems offered instructions that prevented our customers from trading when they wouldn't have wanted to trade in hindsight, and encouraged the trade when they should have traded in hindsight. So it's really quite amazing.
That is, yeah. What's the reaction that you're getting from customers as you present? I can see it's sounding extremely complicated, and it certainly it is somewhat complicated. But you can kind of peel that away and understand. It's not like you can't understand it. But what are your clients and customers saying about this?
Well, we're very much in the classic early adopter phase of any new technology. Again, I'll make the point, it's been asymmetrically unavailable to the buy side because it's so profitable to some of the hedge funds and profits that they have not made it an offering. Being a relatively small company, we thought we could make money by offering these technologies, which we happen to have the staff that knows how to do it.
Right.
So the normal cycle, as you know, in every technology is you get some inquisitive people who are early adopters. They try it, they like it. We're getting very good results. We're getting many basis point improvements in trading results. We're actually beginning to predict a little farther out in time than just the next few seconds.
Okay.
And we're learning as we go on that. The early adopters are, like all early adopters, telling their friends, and so we're getting more over the transom inquiries.
Good.
And I'm sure we'll get to this traditional crossing the chasm situation where we've got a lot of early adopters and the slower main market folks are waiting for proof.
Right.
But that goes with the territory.
Yeah, yeah, good, excellent. Well, I think we'll leave it there. Thanks so much for coming in and telling us about predictive analytics at Pipeline. It's pretty interesting, and it's always good to hear the next step in development and innovation in trading. I mean, there's always something going on, so appreciate your time.
Well, thank you for having me.
You're welcome. Again, my name is Greg Crawford. I'm the editor of TABB Forum, and I'm joined today by Al Berkeley, chairman of Pipeline Trading Systems. Thanks for joining us.